Hey guys, welcome to Digital Outlook. I'm so excited today to have Jake Claver back with Digital Ascension Group. Jake, I'm so happy to see you and start off the new year with you on our show.
Oh, thank you so much for having me. It's great to be back with you.
Last interview was so great and informative, and I'm really excited for this one too. Before we get started, you guys hit that like and subscribe button for Digital Outlook, but also please go over to Jake Claver's YouTube channel and give him a subscribe because he's got some great interviews that came out. This week I was doing my research and my homework, and I was so amazed at all the stuff, Jake, that you have on there. And for people who have a lot of crypto, a little crypto, it doesn't matter. The information you provide is invaluable. And I thought, wow, and it's free. This is so awesome. So you guys go check it out. Jake Claver, Claver. So anyway, thanks, Jake, for coming on the show.
Yeah,
So,
absolutely. Thank you
so
for the shout out.
oh, of
We,
course.
we do our best. We try to put out, good quality content and, just help people position themselves prior to the liquidity event so that they're in a good spot.
Exactly. And that's what I was so excited about when I was watching your videos. I thought, oh my goodness, this is like free advice for people who maybe aren't at a place where they can go ahead and get a financial advisor. But the things that you're saying were so amazing. And so I want to touch on that a little bit today because you just mentioned it, because we're about to have a liquidity event, AKA we're going to be cashing out some crypto this year, hopefully at a good price. I think that a lot of people aren't prepared for that, or mentally they're not aware of some of the ramifications, good and bad, like the tax implications. And so stick around to the end of the video, guys, because we're going to talk about both extremes. We're going to talk about the people who have some really good positions, and we're also going to talk about the people that are newer to the space and they've been working really hard to gather their XRP or whatever their digital assets are. And so I'm excited to kind of help both people. So cashing out a plan, that's my first thing. I have tons of notes, you guys, if you see me rustling here. So in one of your videos, you talked about having a plan to cash out. And one of the things I want to talk on is you mentioned having an LLC. And I know when David and I have spoken to you, that was one of our plans. And so we have gone ahead and done what you've told us to do. And I think that's important, guys, to know that when we tell you things, it's because we've already done it or we're in the process of doing it. And so, Jake, we went ahead and we opened up an LLC, but tell our viewers, why is it important that it's important to have an LLC? And maybe we'll go into how do you do it and what the tax benefit is.
Yeah, absolutely. So here in the US, and it's different across the world. So I'm sure you have international viewers, but
Mhm.
um, just be aware, I'm going to speak primarily to people here in the US in this context. Um, as an individual, you don't get a lot of the tax preferences or benefits that you would if you were a business or you participate through a business in doing certain
Mm.
things. So, a couple things when it comes to crypto. There's a lot of people that trade digital assets, whether that's NFTs or crypto, ordinals. There's a lot of stuff out there now. Lands of the meta, metaverse stuff. Um, when you're doing that, if you're an individual and you're participating in that manner, then you're taxed on the capital gains per transaction. So you've got to report all that. You got these apps like Coinly and a bunch of other ones out there that, connect to your exchanges and your wallets, and they, aggregate all of your transactions and make sure that, you're reporting everything to the IRS. And there's a lot of money in that. And accountants, they don't particularly care for it. I don't know if you have had an accountant that dealt with you personally for trading, but it becomes kind of a headache. So
Mm.
a couple different things.
I want to
Is
ask real quick. I'm
Yeah,
sorry, I didn't mean to interrupt. I'm going to interrupt, guys. So whoever writes me and says you kept interrupting him, is because I have a good question and I don't want to
good
go past
question.
that. So, Jake, do we need to have? Can we have a link maybe to some of those things at the bottom so that people could go to it, so that at the end of the year, as they're preparing to file their taxes for 2023 and they've made trades, or when they do it for 2024 here, we can have a link and they can just sign up for it? Or is it like minimal fee? Or that's David's
Yeah,
department. That's not mine. So I don't know much about it.
we provide two different services. So we have kind of a white glove service that we partner with one of my attorneys for. Michael, he's out of New York. He'll file the LLC for you in Wyoming. He's very fast, very good at communicating. Um, make sure that you stay up to date on, anything when you have the fees to renew, continuing to make sure that you're current with your registered agent and the other things involved with the LLC. He's $800 to do that. We provide the same service, not quite as, white glove, through the website for 400. Some people don't necessarily have the funds, or they just
Mhm.
don't care for the white glove for whatever reason. So that's
What
kind
does
of the
white
cost.
glove mean? Explain what white glove
Yeah.
means.
So um, some people pay for experience or want to call somebody. I like having somebody to call when I have a problem.
Yes.
Um, it's nice to be able to pass things off my plate to somebody else. And so that's kind of what I refer to as white glove. It's somebody else that's in your corner, that will kind of jump and do things as you need them to. Um, like if you need a letter of good standing, you can go online and get it from the state of Delaware. It might take you 30 minutes or an hour, or you can call Michael or message Michael and he'll have it back to you in like 15 or 20 minutes.
And that's to set up an LLC.
Well, so I'm just saying for the letter of good standing, the normal time frame, we are a bit longer when it comes to filing. Wyoming is the fastest state, and that's where we recommend most people file an LLC for digital assets.
Okay.
I've had him get back to me within the same day before, which
Mhm.
is very quick. We're normally 3 to 6 business days when we file it. So
Okay.
if you're looking for speed and, a bit more service, the attorney, if you're looking for just getting it done and you've got a little bit more time, then we offer that service as well.
Oh, that's good. And what about, is there a link for this, the Coinly and things that you were talking about as well, to
Sure.
like kind of add up all your trades or what you've been doing throughout the year? Is there a link I can put at the bottom of this video, or is it an app in your
I'm happy to
phone
send
that?
it to you. It's an app though. I mean, anybody can
Okay.
look it up on their phone. That's probably the one I'd recommend if you were doing your crypto taxes, which we're here at the beginning of the year. So if
Okay.
if you had some trades last year, um, probably if you had any trades, you need to report them. But we'll talk. I can kind of talk about the two different types of LLCs that I recommend for digital assets.
Yes,
Uh,
please do.
so one is a holding company. Um, if you have assets that you plan on holding for an extended period of time, you're going to make less than 2 trades a month, maybe 20 trades a year. A holding
Mhm.
company is probably preferential for that,
Yeah.
especially if you've been holding your assets for an extended period of time before moving them into the LLC. You're going to be able to maintain those capital gain, um, the long-term capital gains tax when you sell them. If you're doing it that way, if you use a trading company, so it's in the business of trading financial contracts or digital assets, then you're going to be subject to short-term capital gains on all trades. So
Mhm.
that's just something to consider when you're setting things up. Um,
Okay.
and that's kind of the threshold I talk about. If it's more than 2 trades, probably looking more like a trading LLC. If it's less than that, then the holding company is probably the better bet.
Okay. That's good. That's good to know.
And
And I saw in your video, you were also, um, well, let me say, so you were talking about trusts as well as LLCs. And so what's the difference? Like if someone
Mhm.
out there, the mom and pops out there, and they own their home or they have their home, what would be the benefit of getting a trust and putting perhaps your crypto into the trust? What's the benefit that way?
Yeah, so there's lots of different types of trust, and depending on what your long term goals are, you might set things up a bit differently. Most
Mhm.
people are aware of a living trust, which would be revocable or irrevocable. The irrevocable tends to get the better tax benefits. Revocable, you can make changes to, just like the names, kind of
Mhm.
intends. Um, those I tend to see used for assets that are something that you're going to use on a regular basis, not necessarily something that produces cash flow, or appreciates in value. So things like family heirlooms, maybe precious metals, maybe your home that you live in, your vehicles, side by sides, motorcycles, fun stuff that you use or your family uses,
Mhm.
um, that you want to leave to your descendants without any estate tax. Um, living trust probably best option there. For assets that are going to be producing cash flow, we tend to see an asset protection trust that's been filed there in Wyoming. as the best solution for that, for digital assets in particular. And there's some other contract law that's written in there that has better provisions for things. So trust, let's say you rear end somebody. Okay.
Okay.
Things happen in life, and the other party is hurt, or they pretend to be hurt. There's situations that arise, and they come after you, sue you beyond whatever your insurance is, because they have emotional damage or whatever other things they state. They find out that you have some money, so they're going to come after you. If your assets are in a trust, it can be really difficult for them to get to those assets, because you no longer own them. They're no longer in your name, they're in the trust name, if you set everything up correctly. And so a lawyer that sees that, because they'll do an asset search and see if you're the beneficiary, what you're attached to, da da da. They'll tell the client, they'll be like, hey, look, you're going to spend about $2 million to try to pierce the veil on this trust, and there's no guarantee that even after a couple of years and all this money that you're going to get anything.
Okay.
And so it's a big deterrent for anybody that's going to come after you legally, to try
Yeah.
to get the assets. The LLC is the other way around. So if you are the only beneficiary on the cap table for the LLC, if somebody sues you personally, they can come after the assets in the LLC. So that's kind of the benefit of the trust. It protects the assets from litigation against the individual that originally purchased them, or is maybe the controller, not necessarily the owner of the assets. Whereas the LLC prevents any lawsuits from piercing that veil and coming after you personally if the accident happens in the lawsuit, or I'm sorry, if the accident or the problem happens in the LLC. So let's say you own a yard company. Okay, you're a landscaper, and you have mowers and trailers and weed eaters and all those assets that you use to
Right.
perform whatever the work is. And you probably have a crew of people that are the service people. Oftentimes they'll have a holding company that owns the assets, and then they'll have a service company, and the holding company will lease the assets over here to the service company. So the service company's out on the property, something bad happens, somebody gets hurt, lawsuit happens. This company doesn't own any of the assets. So if it got sued, then they just dissolve this company, spin up another service company, and lease the assets back to it and continue working. So that's, and if somebody sues that company, they can only get to the assets that are in that company. They can't get to your personal assets or assets that are in a trust or separated. So you just want degrees of separation on things when you do have, a reasonable amount of assets, just as protection and to mitigate risk of loss. And those are kind of some of the key differences. There's obviously things beyond that, but for the scope of this call, I think that covers a lot of the differences
Yeah.
for people.
No, that's good, because I know that there are different people that have, like I said at the intro, they have a good bag of digital assets, and it's really important that they set things up before the liquidation happens. And it seems like having a trust and or an LLC really is the way to go. And so before you cash out your crypto, I know one of the questions that David and I had was, so if you cash out your crypto, or let's say you've held it for 2 years and you put it into the LLC, some people may ask, well, the LLC didn't own it long enough, so they're going to take a higher hit than if I would keep it and cash it myself. And so share the benefits of why you would want it in the LLC for the tax implication.
Yeah. So again, in an individual's name, you don't really have much recourse to mitigate taxes. You're just going to get stuck with whatever it's going to be.
Okay.
With an LLC in place, you have the capability to write things off against the income of the LLC. So let's say you wanted to buy a vehicle, you could use section 179 of the tax code. Anything over 6,000 pounds is heavy equipment in the eyes of the IRS, and you can depreciate up to 80% of the value of that item in the first year. So let's say you go finance a G-Wagon, it's a $200,000 car, you put 40,000 down, you can write off 160,000, but you only had to spend 40. you guys were telling me about the solar panels that you guys got on y'all's property,
Mhm.
right? There's other things that you can do on that side with a business that an individual isn't going to have the opportunity for. So you have the ability to mitigate the tax implications at a much higher degree, and so
Okay.
and you can spend the money on things that you wanted anyway, right? Like I said, so if let's say you wanted a vehicle, as long as it's over 6,000 pounds, then you can justify it. Now, um, I've seen some influencers write off some crazy stuff because uh, they determined that it was for the use in their business, or they needed it for promotion or whatever else. And you can, if you can find a CPA that'll walk the line for you, that's great. Um, but yeah, so that's
Yeah.
really the benefit is if you are if the assets have moved into an LLC, then and you do take profits, then you're going to be able to mitigate the tax implications. And to your point there about the step up in basis, so depending on how long you've held the asset, you're subject to different type of capital gains.
Okay.
Less than a year is going to be short-term capital gains, which is here in the U.S. It's just taxed at the income rate. Over a year or 12 months from the day that you purchased it, if you sold it a year later, a year and a day, then you have long-term capital gains. And so those rates are a bit different than normal income tax. If you're married, it's gonna be like 550,000. Beyond that point, it's going to be 20% capital gains. Under that, it's 15, and then if it's less than $18,000, you don't get any taxes on it.
Okay.
And so make sure that you're working with a qualified CPA or an accountant
Mhm.
when you're doing this, and you find people that are qualified when it comes to digital assets. We've aggregated all those people as resources here at the family office. That's what we specialize in. So
Good.
happy to just share individuals. We're not selfish. If you just need a la carte here and there, all the professionals that we work with are competent, and I'm happy to
Nice.
refer them.
Yeah,
So
that's good. I would say I know David and I had to switch accountants because when we got into the digital assets, our accountant flat out said, I don't know much about it. And I thought, well, then that means I can't use you. And so we had to move them because it's important that your accountant understands digital assets. So when you go to cash out, everyone, you need to they need to understand what are the tax implications, what's happening. It's not something that you just want to play with. So I would set, and you would agree probably, Jake, to set it up now. Find someone, and if they don't know who to go to, you can always contact your family office, and you are saying that you could help someone find an accountant. I know you helped us find our new accountant because we had said to you, our guy said flat out, I don't know anything about digital assets. I can learn. I'm like, yeah, not on me. You can learn on
right.
someone else. And we had him for a long time. It was kind of difficult to leave, but we had to do what was best for us. And so um, I know some people make silly comments on the thing like, oh, well, I'm not going to pay taxes. I'm not going to report it. And that's not going to happen. The IRS knows before this pump happens, they're setting up their plan, their financial plan, I believe, to be able to come after people who aren't filing digital assets.
Yeah, you want to disclose. At this point, the
Yes.
majority of the platforms that you're purchasing on have KYC AML compliance built in. Like you're going to have to
Mhm.
identify
Yeah.
if it's Uphold, if it's Coinbase, if it's Kraken, if it's
Whomever.
BitTrue. I mean, wherever
Yeah.
you're KuCoin, wherever you're buying, they
Yeah.
know who you are. They're
They
reporting
do.
it just
Mhm.
like a stock exchange or another one of these brokers. They're required to at this point.
Mhm.
Um, to participate anonymously is very difficult. And when you go to cash out, they're going to have to file the form for the more than $10,000 being deposited, and where it came from and all those things. And
Mhm.
it's not illicit. You're not doing anything illegal. So I
That's
don't know
right.
why people want to evade the
I know.
taxes. Just find people that are qualified to be able to help you mitigate those tax implications. And if you have to spend some money on things at the end of the year, do that, you know?
Right.
Um,
Invest now, save later, basically, right? Like
right.
do what you need to do. And I know we've talked about this privately, and we both use Caleb and Brown, and they're not here. I interviewed Billy, my broker, and he's a really great guy. And we just can't say enough nice things about Caleb and Brown. They're totally legit. I know one of the things, although this isn't your company, But I know a lot of people are saying, well, if it's not your crypto, you know, not your wallet, not your crypto, or however the saying goes. And so what David and I do, and I don't know if you do this too, is, you know, when we're ready to make a trade, we've already set up the structure. Then we send them the money, we wire it to them, they make the trade, and then it comes back to our bank account. Other people aren't. We have family members that are elderly and they're not like confident that they could do this, you know, when it happens. So we've encouraged them, okay, well, they're a legit company, they're absolutely secure. And so they've sent over their crypto just waiting, and they can pick up the phone call and call them. And what has your been experience with Caleb and Brown? Just because that's part of getting ready to liquidate your assets, is having a broker that can sell it at, so let's say it goes up, sorry, and I'll let you answer the question. If it goes up and you said, I want you to sell it, you know, $100.05, and then you got the order in and it plummets down to $1 or $100 or $98, because you had it at the $100.05, they would cash it out at that. Is that correct?
Yeah,
From
you
what you
set limit
understand?
orders. Yeah.
Yeah.
So we deal with a couple different OTC brokers at this point. Caleb and Brown was the first one that we ever, you know, endorsed or worked with, and they offer a white glove service, right? And they charge a fee for that. But again, I'm somebody that wants to call somebody and be able to have a conversation.
Yes.
So I really like having a broker with them.
Mhm.
And for those people that, you know, you want to be in position previous. I think is really kind of the general
That's the
message,
key.
right?
Yes.
So, you know, when euphoria happens and the excitement and all the things, I've sent a lot of money into the abyss. Okay.
Mm.
Um, I
Meaning
think,
that you thought you were sending it someplace and you hit the wrong number and
yeah, I
it just
just copy
disappeared.
paste the wrong address or fat
Yeah.
finger something, and then
Yep.
it's gone, you know?
Yep. Yep.
So it's probably better to move things around when you're calm and
Hmm.
collected, and you can execute that. Hopefully, here before too long, we don't have to worry about these long wallet addresses, and it's much easier to
Yes.
send these things. But right now, that's still the case. And so I would just, you know, whatever you plan on selling, whatever percentage you might hold it over there. I have a lot of confidence in Caleb and Brown.
Hmm.
They've never been hacked as far as I'm aware of. What gives me a lot of confidence in them is that they are in the most stringent financial jurisdiction on the planet. Australia has a higher regulatory compliance law for financial institutions there than anywhere else on the globe,
Hmm.
even New York. And so, um, for them to be in the position that they are, they have to have a really high standard. Um, and if you call them, if you deal with them, then you'll see that that's the case. But
That's good.
yeah,
Yeah.
I think that that's a great idea to have, you know, whatever portion you plan to sell, just sitting there waiting for that to happen and have a limit order in with your broker.
Hmm. So basically, if you don't have the means or the funds to be able to open up an LLC, or you don't have the ability to do that because let's say you have 50,000 or less XRP, maybe even less than that, maybe
Yeah.
20, whatever. And you're not really thinking opening up an LLC will be beneficial. You could still do a trust to secure your family's wealth. And you could also sign up for Caleb and Brown, so that when you go to at least change your funds, exchange your funds, it goes directly back into your bank account, and it's secure, and it's not something that you're going to lose in the abyss, like you said.
Well, yeah, and I would have those things set up beforehand and maybe do some test transactions, right?
Yeah.
Uh,
Yeah.
if you do have an LLC with them, they do require that you have a notarized operating agreement. That's one of the things that I recommend when we do set things up with our clients. Anybody that calls me and we have a conversation, that's one of the things that we do when we
Okay.
move the assets into the LLC.
Hmm.
So, and it takes a little bit longer to set up accounts for LLCs and trusts versus just individual name accounts. KYB is a bit more extensive than just KYC. And so, yeah, you want to be proactive and make sure that you have that set up beforehand. You just mentioned trusts there. I will say that the costs on trusts are going to be considerably more than just an LLC.
Oh,
Uh,
okay.
so, you know, depending on what type of trust you have and if it's been executed correctly, Most often it's going to be somewhere between $4,000 and $20,000 to get things set up.
Okay.
And honestly, that's probably the best option, even above and beyond an LLC, especially previous to price appreciation.
Mhm.
But the LLC gives you a lot of flexibility that a trust doesn't.
Okay.
You're still technically the owner of the equity in the LLC, and you have direct access to the assets, and you can do what you want with them. You also have the ability to finagle things to get them into a trust later on if they're already in an LLC. So let's say, let's say you had 300,000 XRP, just as an example. I gave this on DAI and Brad still almost a year ago. You got 300,000 XRP, goes to $100, you got $30 million. Okay. You and your spouse, you get 25.84 total in gift tax threshold here in the US before you're going to have tax implications just for moving it into a trust.
Okay.
And that's taxed at 40%, anything that's above that threshold.
Wow.
So let's say you had it in an LLC previous to the price appreciation, and were able to gift, like 2% to one child or a relative or a friend, and then another 2 or 5% to somebody else that you want to take care of anyway.
Okay.
Now we can get a evaluation done on the LLC, and it's going to be there's going to be a like a 20 to 35% reduction in the value that it'll appraise for, because now there's minority owners on the cap table that make things more cumbersome, and so
Mhm.
now your 30 million in value comes down to under the gift tax threshold. And now we can move the assets into the trust and do things, so the LLC provides ancillary benefits aside from just the tax mitigation.
Oh, we froze.
I got it.
Oh,
You're good.
I'm
It
like,
was
oh
on my side.
no,
Where
that's
did I
okay.
drop off?
You
Yeah.
were talking about, I think, the trust. If you have your things in an LLC and you have 30 million, you have the gift tax,
Yep.
and you've lowered your you're under the threshold. Then you said,
Yeah. So having your stuff in an LLC is just going to allow you a lot of flexibility that, having things in your personal name, you're going to be stuck. You're going to be saddled with that $30 million valuation. And you may or may not want to move all those assets into the trust. Having the other LLC outside the trust is something that we almost always do for clients anyway, because paying taxes for the profits that are generated in the trust through an LLC that's associated tends to be a lower tax threshold than being taxed at the trust level. So again, make sure you're dealing with a competent and qualified estate planner.
that's where you come in, Jake. That's where you come in. So everyone, if you need some financial advice, I would definitely, we're going to have a link to Jake's home office. Is it the home office that they will go to, or is it Digital Ascension?
Well, so Digital Ascension Group is the name of the company. Digital Family Office is the name of the website, digitalfamilyoffice.io.
Okay.
I will say I am not a financial advisor. I don't give financial advice.
But you know who you can, and you send us to
Yeah,
them.
we're partnered with all those individuals.
Yeah, that's good.
I know enough to be dangerous, but I am just some guy on the internet.
That's right.
So
For entertainment purposes only.
yeah.
That's right. That's what everyone always says. I think we should come up this year with a new one. Like, I don't know. I don't know. Anyway, my other question is for the people who have, like, let's say 10,000 XRP, and the LLC is not going to be worth something because you're saying the cost of it, they might as well just invest it into XRP or wherever, a meme coin, whatever they're going to invest in, right? It was not worth it.
Well, potentially, right? So it used to do a cost to benefit analysis on things. And I have a calculator for this. It's the only reason I kind of gave you the values I did before.
Okay.
So if we're right about some of these digital assets, and it doesn't necessarily just have to be XRP, it could be Casper, it could be HBAR, it could be Cardano, it could whatever you think is going to go 10, 15, 20, 100x for you. Okay. That $500 that's invested there could turn into, if it's 100x, we're looking at, $50,000 on a $500 investment. Right. Well, if that $500 investment isn't going to save you at least $50,000 in taxes,
it's not worth it.
Then yeah, it might be better to just make the investment. So everybody's in a different situation. Some people
They
plan on
are.
holding longer than others.
Yes.
Some people are married. Some people are about to retire. Some people,
Hmm.
there's a lot of considerations that you would have around where you're at and what you want to set up previous to the liquidity event. But I find most often, like you stated, north of about $50,000 invested is, tends to be the threshold where I think that an LLC provides the most benefit.
Okay. And so if they're interested in doing that, they would contact you and you would be able to
Yeah,
get
happy
them
to
the
help them.
information that they need. And if you're under the 50,000 threshold, then you would highly encourage them to at least minimal sign up for Caleb and Brown to get their money so that they can get off the exchange
Mhm.
or whomever they choose. But
I would get a
I know,
broker.
pardon me?
Um, I would get a broker.
Mhm.
So Caleb and Brown is a fantastic choice. Um, if you're going to execute trades north of a quarter million, there's a couple different OTC desks that I can refer people to,
Okay,
um,
good.
where the fees are a bit less than Caleb and Brown. So Caleb and Brown, they charge a premium because they're worth it and they do a good job.
Mm-hmm.
Um, but some of the OTC desks that I work with, they'll execute trades for like 15 to 30 basis points, which is 10 times less.
Okay,
So
that's good. So
just,
depending on where you're at and what you're doing, if you're a trader versus a hodler, a holder,
mhm.
um, okay, that's good. Yeah, because I want people to get set up. And we also have a link at the bottom of our website. If you go into our thing, we do give a discount to Caleb and Brown. So that will help you, it'll help us, and it would be a great, thing to do. The other thing I wanted to touch on real quick, just about investing and things, is you did talk about um whole life in one of your videos. You were talking about um one way to mitigate. Now, if you didn't have a lot of if you didn't have a big bag, let's say, and you had 10,000, could you still do a whole life policy? Is that something that would be beneficial, or a universal index, or is that only for like the big players?
Yeah, so we use PPLI for the majority of our clients, which is private placement life insurance, and for that you can actually move the asset itself into the policy. The minimum threshold there is going to be about $5 million
Okay.
in value of the asset. So that's not to say that 10,000 of something doesn't turn into $5 million worth someday.
Right, right.
But in the short term here, um, I like, these are all tools, is what I will
Okay.
say. So anybody selling you that this is the end all be all and it's the only way to do it and it's how the wealthy stay wealthy, da da da. I'm leery of that.
Hmm.
Those policies tend to be pretty lucrative for the people that are selling them. And you want to
Okay.
make sure that you're educated on them and you understand how they're being structured so that you're not being taken advantage of.
Okay.
Um, so I don't fee share with my um the professionals that I work with. And the reason for that is I don't want a monetary bias. That I just want to make sure that I'm always keeping my clients' best interest at heart.
That's
And
good. So you're not doing it because you're not shilling something like they do. Some
no,
people, some YouTubers do on coins. You're like, you're invested in this. You're not, you don't care about my investment. You're just trying to sell your thing. So it's nice you keep neutral.
I try to, right?
Yeah, that's good.
And so, but yeah, a whole life policy can be an effective tool. An IUL can be an effective tool. The benefit there is if you put money or assets into a life insurance policy,
Hmm.
um, it can grow there tax free, and then it can pass
Um,
to your descendants with no estate tax. So there's going to be people that get caught off guard, um, that have large bags of digital assets,
they
and
didn't know it,
they
but they
think,
do.
well, right, they don't think it is right now. They think, oh, I've got a
Exactly.
modest investment. I'm like normal, like everybody else. Um,
Hmm.
and let's say things happen rapidly and things appreciate and they start being used like we all hope.
Hmm.
Um, and now you're caught off guard and you're on the other side of that gift tax threshold and you don't know what to do.
Hmm.
Well, that's when the insurance policies can become a really effective tool to mitigate the taxes. So again, if you've got an LLC and the assets are in there, then we can take out key employee insurance on you and we can fund the policy with the assets from the LLC. It's
Mm.
not cheap to do that. I will say, if it's a $20 million policy, you're paying about 400,000
Wow.
in fees to get it set up. Um,
which
but
is a
that's
write-off and you
it
need
is a
that, right?
write-off,
And it's a
but
write-off if you're making that kind of money, right?
it's
So
2% instead of pointing to the government.
yeah,
Um,
exactly.
so that's the trade-off there. Whatever you do to mitigate taxes is probably going to have some costs associated with it,
Yeah.
but the benefits outweigh the costs, right? And so it can grow tax-free there. So once the
Mhm.
asset's in the policy, it can go to the moon, and you don't have to worry about any capital gains on it.
Mhm.
You can continue to leverage the asset in whatever capacity you wanted to. So let's say you want to take loans against it, or you wanted to use it to produce income of some kind through staking, or maybe liquidity pools, or whatever else ends up existing in the
Mhm.
future. Um, you can still do that with the assets in the policy. And then, like I stated, they would be able to pass to, hopefully you got a trust set up, and they'll pass to that trust with no estate tax when you leave this world. So
And you suggest that if you own a home or you're paying off a home, when I say own a home, you have a home and you have a mortgage on it, it would be wise to put it in a trust.
yeah, in most situations, yeah. I mean, and if, like I said, my threshold for net worth on establishing a trust, because I've had so many people ask, like, why, at what point does it make sense? Um,
Right.
I think that threshold's somewhere between a half a million and three-quarters of a million in net worth. Um, it would
So
also
meaning if
depend
your home
on,
is worth 250,000 or more,
yeah, if a living trust probably meant, well,
more?
so you're not going to pay taxes on the transfer of an asset or the sale of an asset in most states under half a million.
Okay.
Um, so if your kids get it and they sell the property, they're probably going to be okay. They won't have to pay taxes on it. But if you're north of that, yeah, I probably want it in a trust.
Okay, that's good. And then just wrapping up. So for all of our people who think that they can avoid taxes, they cannot. Make sure you have a good accountant that knows digital assets so they can help you and mitigate the taxes. And just know that when you do cash out, you need to put money to the side to pay your taxes because you don't want to get in the crosshairs of the IRS or any government
Yeah.
that you're in.
Well, I'll just say, I'm hopeful, like everybody else is, that the IRS has been disbanded and there's no more Fed and it's all the Treasury and all those things that you hear, right?
Yes, exactly.
I would
But
love
if
that to be
not,
the case. But until that actually happens, I have
right.
to operate under this, that it hasn't. And with that, the
Mhm.
IRS is still very much alive, and taxes are still a thing.
Yeah.
And it if you want to qualify for a loan, there's just so many things that are going to require tax returns.
Hmm.
Um, so just work with a
Are you there? Oh,
sorry,
that's
it
okay.
dropped out again. Um, you don't have to pay your fair share, but I hate when people say fair share.
I know.
If you're working with a good CPA or accountant, then they're going to give you all the options, right? And that's what all these are. They're just options at the end of the year for how you can allocate capital to um, provide benefit to your business and the economy. That's
Hmm.
the IRS tells you how to not pay taxes with the tax code.
Yeah,
Like
sure
that's
they
the whole
do.
point of the tax code.
Hmm.
They incentivize you to do certain things with your money that benefit society and probably themselves too, U.S. government.
Of course.
And I would rather allocate my capital myself than give it to
Hmm.
the government and let them mishandle it like they have been. So just my
Yes.
2 cents.
No, no, that's good. Well, Jake, I really appreciate you coming on and sharing all of your wisdom with us and giving us your pointers and your ideas and your tips. And I really just know that this is going to be a good year for us, and I'm excited. And I think you'll be getting some phone calls. Hopefully, our people, our friends out there, will contact you if they haven't done anything and they've been thinking, I need to do this. I need to do this. You need to do it before it starts pumping. It's happening this year,
Yeah, we're
probably the beginning. Wouldn't you say that it's going to start this year?
well. Before the call, we were talking about the ETFs and the ETPs that have been filed, and institutions stepping in a meaningful way.
Yes.
I don't know if they're going to get approved in this round. It seems like there's a lot of hype.
Yeah,
And
definitely.
so I'm concerned about that, but at the same time, the institutions are here and liquidity is going to come in. And when that happens, it's going to add a lot of value to this asset class.
Mhm.
And my anticipation is you are correct that it will happen at some point in 2024. So,
Right. So get ready now. Get ready now. Get your systems in place. David always talks about how we want you there in the winner's circle with us. But in order to do that, you have to, exercise. We need you to exercise your wisdom with getting things ready financially so that you're ready when it pumps, you have everything in place. Because after it's done, everyone's going to be calling us, wanting coaching. They're going to want to be talking to you. And it's almost too late because you're missing the point of the
well,
pre.
like I said, I've done everything that I can to put contingency plans in place and make sure that we have options for people that do wait until after.
Okay, good.
But it's always better to be proactive than reactive.
Yes,
So
yes.
I'm with you. Probably better if people took
Mhm.
action now.
Yes. So contact Jake, sign up for his YouTube video. And if you want to go back and watch other videos that he's talked about, it's very informative. I had so much fun watching him. I mean, I've seen like your shorts and I watch your video, but when I was preparing for this, I just so enjoyed hearing how you were sharing what to do for the coming bull run. And so, Jake, thank you so much. It's just always a pleasure to have you. And I wish you all the best this year. And I know we'll be talking personally as well as in this space. And I'm sure I'll see you at the XRP conference
In
that they're
Vegas, yeah.
having in
Looking
Vegas,
forward to
right?
it.
That's where we met you in the first place.
Yeah,
So,
absolutely. Thank you so much for having me.
oh, you're welcome, Jake. Take care. Bye.
See you.